The Nvidia-fueled AI rally is pushing futures higher this morning, igniting a global rally in tech stocks. Wall Street cheering the chip maker's fourth quarter earnings beat and demand for its data center chips.
Nvidia Corporation ignited a record-setting rally in the stock market on February 22 after the chipmaker posted blockbuster fiscal fourth quarter earnings on the strength of a spending hysteria on artificial intelligence. And that's what got me into making some findings about this company's stock. In this video, I will delve deep into why Nvidia stock is getting the recent attention. I will talk about their cutting-edge technology, their market share, the forecast for their chip, and above all, what makes them better than their competitors AMD, Intel, and Qualcomm. Let's start from here.
We have $4 trillion companies. One is Microsoft, one is Apple, one is Google, one is Amazon.
Only 4 companies in the world are worth over $2 trillion. Apple, Microsoft, Google, and Amazon. But as of recently, Nvidia joined the league. It's understandable if the name doesn't ring a bell. The company doesn't exactly make a shiny product attached to your hand all day, every day as Apple does. Nvidia designs a chip hidden deep inside the complicated computer innards, a seemingly niche product more people rely on daily, making them trillions. Here is a Yahoo Finance report on this.
Nvidia shares extending gains from its most recent earnings report, and the company briefly joining the $1 trillion club.
Rewind the clock to 2019, and Nvidia's market value was hovering around $100 billion. Its incredible speed runs to 20 times that already enviable size, which was enabled by one thing: the AI craze. Nvidia is arguably the biggest winner in the AI industry. ChatGPT maker OpenAI, which catapulted this obsession into the mainstream, is worth around $80 billion. According to market research firm Grandview Research, the global AI market was worth under $200 billion in 2023. Both are just a paltry fraction of Nvidia's value. With all eyes on the company's jaw-dropping evolution, the real question now is whether Nvidia can hold on to its lofty perch. But that also won't be reasonable enough until you know how the company got to this level. A drift into history. When it went public in 1999, Nvidia had 250 employees. Now it has over 27,000. Jensen Huang, Nvidia's CEO, and one of its founders, has a net worth of over $70 billion, an over 1,700% increase since 2019. Likely you've already brushed up against Nvidia's products, even if you don't know it. Older gaming consoles like the PlayStation 3 and the original Xbox had Nvidia chips, and the current Nintendo Switch uses an Nvidia mobile chip. Many mid to high-range laptops come packed up with an Nvidia graphics card. However, with the AI bull rush, the company promises to become more central to the tech people use daily. Tesla car's self-driving feature utilizes Nvidia chips, as do all major tech companies' cloud computing services. These services are a backbone for so much of our daily internet routines, whether streaming content on Netflix or using office and productivity apps. To train ChatGPT, OpenAI harnessed tens of thousands of Nvidia's AI chips together. Here is the result, according to CNBC.
OpenAI, the San Francisco-based startup that created ChatGPT, opened the tool up for public testing in November 2022. In under a week, the AI model amassed over 1 million users, according to OpenAI's CEO.
People underestimate how much they use AI daily because we don't realize that it has boosted some of the automated tasks we rely on. Popular apps and social media platforms are adding new AI features seemingly every day. TikTok, Instagram, X, and even Pinterest all boast some kind of AI functionality to toy with. In 1993, long before uncanny AI, generated art and amusing AI chatbot convos took over our social media feeds, 3 Silicon Valley electrical engineers launched a startup that would focus on an exciting, fast-growing segment of personal computing, video games. Nvidia was founded to design a specific kind of chip called a graphics card, also commonly called a graphics processing unit. This invention enables the output of fancy 3D visuals on the computer screen. The better the graphics card, the more quickly high-quality visuals can be rendered, which is important for playing games and video editing. In the prospectus filed before its initial public offering in 1999, Nvidia noted that its future success would depend on the continued growth of computer applications relying on 3D graphics. And in this clip, I'm about to show that their plan worked out.
$22.1 billion. The street, on average, is looking for 20.41, so a beat on the revenue side here. Gross margins in the quarter, wow, 76.7%. That was their adjusted gross margin in the fourth quarter, a beat versus what the street was looking for 75.4. Data center revenue in the quarter also beat 18.4 billion. The street was looking for 17.2 billion. Gaming revenue also a beat. Automotive revenue also a beat here as well.
Nvidia became a powerhouse selling video game cards and is now an entertainment industry juggernaut, making over $180 billion in revenue last year. Still, it realized it would be smart to branch out from just making graphics cards for games. Like other investors, Nvidia owners aren't successful in all their experiments. Over a decade ago, Nvidia made a failed gambit to become a major player in the mobile chip market. Still today, Android phones use a range of non-Nvidia chips, while iPhones use Apple-designed ones. Another play, though, not only paid off but became the reason we're all talking about Nvidia today. In 2006, the company released a programming language called CUDA that, in short, unleashed the power of its graphics cards for more general computing processes. Its chips could now do a lot of heavy lifting for tasks unrelated to pumping out pretty game graphics. It turned out that graphics cards could multitask even better than the CPU, often called the computer's central brain. Let the director of GPU computing, Ian Buck, speak on this.
That's when we started on CUDA, and for over 2 years we were doing internal software development, and finally he shipped CUDA 1.0 back in 2006 with the GeForce 8800.
This made Nvidia's GPU great for calculation-heavy tasks like machine learning and crypto mining. That was the same year Amazon launched its cloud computing business. Nvidia's push into general computing was coming at a time when massive data centers were popping up worldwide. It's cutting-edge, quick decision-making. Nvidia is a powerhouse today, especially notable because for most of Silicon Valley's history, there was already a chip-making Goliath, Intel. Intel makes both CPU and GPU, as well as other products. It manufactures its semiconductors, but after a series of missteps, including not investing in the development of AI chips soon enough, the rival chipmaker's preeminence has somewhat faded. In 2019, when Nvidia's market value was just over the $100 billion mark, Intel's value was double that. Now Nvidia has joined the ranks of tech titans designated the Magnificent Seven, a group of tech stocks with a combined value that exceeds the entire stock market of many rich G20 countries. Compare this graph. For this, not only that, it overtook Alphabet as the third largest company by market cap.
Nvidia up to another record 1.4%, but I want to take a look at the market cap because Nvidia over the last 2 days has briefly from time to time surpassed Alphabet in market cap. They're both about $1.8 trillion right now, so both shy of $2 trillion, and Nvidia recently passed Amazon as well.
Today, Nvidia's four main markets are gaming, professional visualization, 3D design, data centers, and the automotive industry. It provides chips that train self-driving technology. Also, it focuses on healthcare and robotics. A few years ago, Nvidia's gaming market was still the biggest chunk of revenue at about $5.5 billion, compared to its data center segment, which raked in about $2.9 billion. Then the pandemic broke out. People were spending a lot more time at home, and demand for computer parts, including GPU, shot up. Gaming revenue for the company in fiscal year 2021 jumped a whopping 41%. But there were signs of the coming AI wave too, as Nvidia's data center revenue soared even more impressively. Listen to this.
When it came to the end of the March quarter, they forecast the quarter we're in right now, and it was more than 50% higher than analysts had been expected. They telegraphed revenue of $11 billion. Now, the analysts' expectations are now for ever so slightly more than that, $11.04 billion, more or less in line.
That clearly shows how quickly the AI race ramped up. Data centers have overtaken games, even in a gaming boom. Immense success in the last accounting period. Nvidia had one of its best years in business since its founding over 3 decades ago in 2023. The company's business exploded after the launch of OpenAI ChatGPT, which reignited interest in artificial intelligence and sent demand for GPU soaring. Nvidia's dominance in GPU gave it a head start in AI, beating competitors such as Advanced Micro Devices and Intel to the market and allowing Nvidia to become the primary chip supplier to numerous companies. As a result, Yahoo Finance reports that the chipmaker's earnings have soared, with its stock up 211% year-to-date.
All right, well, it is a big week for Nvidia as well as the company gets set to report third quarter earnings after the bell tomorrow. The chipmaker's blockbuster earnings report back in May sent a ripple effect through the market as investors bet big on the future of AI. Nvidia shares are up over 200% so far this year. We're looking at gains of nearly 240%.
Nvidia's bumper profits and revenues helped the chipmaker register a record one-day gain in market capitalization for any company in the United States. Nvidia added $277 billion in market capitalization in the last trading session. The state of things. This California-based company's one-day gain in stock market value easily surpassed the one-day gain of $204.5 billion by Meta Platforms, incorporated on February 2 after the social media giant reported robust quarterly results and declared its first dividend. In reality, Nvidia's one-day gain eclipsed the entire value of the Coca-Cola company at $263.7 billion.
After a 16% surge, Nvidia's shares added $277 billion to its market cap in just one day, bringing its total market cap to around $1.96 trillion.
An upsurge in demand for Nvidia's chips helped the firm post revenues of $22.1 billion in the fiscal fourth quarter, up a whopping 265% from a year ago. Nvidia's chips are needed for AI models developed by companies like Meta and Microsoft. In particular, Nvidia's data center business, responsible for manufacturing the H100 graphics cards utilized for AI training, saw revenues jump $18.4 billion in the fiscal fourth quarter, up a solid 409% year-over-year. The data center business was able to shrug off the adverse effects of government curbs on exporting advanced AI semiconductors to China. Let us not forget that the H100 graphic card has become a gold standard for AI developers for data crunching required in language models. The H100 chips are, at the moment, one of the most sought-after commodities in Silicon Valley after the rapid success of OpenAI ChatGPT. Meta is planning to increase its stock of H100 chips to 350,000 by the end of this year, as Chief Executive Mark Zuckerberg mentioned.
We're building an absolutely massive amount of infrastructure to support this. By the end of this year, we're going to have around 350,000 NVIDIA H100s, or around 600,000 H100 equivalents of compute if you include other GPUs.
Thus, Nvidia is optimistic about its growth and expects revenues for the current quarter to reach $24 billion, way ahead of estimates. Improvement in PC shipments recently as price pressure eases due to the Federal Reserve's monetary tightening measures is also expected to benefit the chipmaker soon. Nvidia's gaming business, too, made some advancements in the reported quarter and is expected to do well in the rest of the year. Here is Zacks stock ranking. Nvidia's expected earnings growth rate for the current and next year is 58.9% and 15.6%, respectively. Its estimated revenue growth rate for the current and next year is 52.5% and 15.5%, respectively. Additionally, Nvidia has a high net profit margin since the company has generated enough sales income and has successfully controlled operational costs. Nvidia's net profit margin is a superb 48.9%, a telltale sign that its shares should move upward. As a testament to the strength of Nvidia stock, it remains dominant even as AMD enters the AI market. Nvidia is not only the leader in discrete GPU for gaming PC and data centers, but also the undisputed king of AI chips. According to a report by Nvidia, Nvidia had an 81% market share of AI chips used in cloud and data centers. Nvidia's dominance in AI chips is based on its superior technology and software ecosystem. The chipmaker's CUDA platform provides a unified framework for developers to create and run AI applications on its GPU. Also, Nvidia's TensorRT software enables fast and efficient inference of AI models on edge devices. Nvidia might face some competition from AMD, which is set to launch its first AI-focused GPU, the Instinct MI200, in early 2024. However, Nvidia has a strong lead over AMD regarding software support and customer loyalty, which could make it hard for AMD to gain significant market share in the short term. Should I buy this stock? After what I've said about this, you are still in doubt. Let me explain why you will regret it if you don't buy it soon. First, you'll profit from the $137 billion AI market. According to Grand View Research, the AI market is valued at $137 billion. It is projected to expand at a compound annual growth rate of 37% through 2030. Technological advances can boost countless industries, from cloud computing to consumer products, healthcare, education, autonomous vehicles, and more. Meanwhile, high-powered chips are crucial to run and develop AI models. So, as numerous tech firms have pivoted to developing the sector this year, GPU demand has skyrocketed. The rise in sales has been most prevalent in Nvidia's earnings, delivering stellar results quarter after quarter. In the company's third quarter of 2024, revenue increased by 206% yearly, with operating income climbing 1,600%. The monster growth came alongside a 279% rise in data center revenue, which massively benefited from increased AI chip sales. Heading into the new year, the tech market's hyper-focus on AI looks unlikely to dissipate. Nvidia has claimed a lucrative role at the top of the AI chip sector, which could prove challenging for competing chip makers to overcome. Another reason is the recovering gaming business. Macroeconomic headwinds in 2022 led to steep reductions in consumer spending across tech, with Nvidia hit particularly hard. The company posted a repeated sales decline in its gaming segment throughout the year as spikes in inflation caused shoppers to pull back on console and PC component purchases. The tech giant has multiple footholds in gaming, supplying its chips to Nintendo's Switch console and selling desktop GPU to gamers worldwide who use the chips for custom-built gaming PC. Despite the setbacks, the market appears to be trending upward again. In quarter 3 of 2024, Nvidia's gaming segment posted revenue growth of 81% year-over-year and 15% sequentially. The company attributed the rise to strong demand for its GPU in the back-to-school period and the start of the holiday season. A return to growth in gaming means Nvidia headed into 2024 on a much stronger footing than it started last year, with a booming AI business and solid position in video games. Although the global semiconductor industry has struggled with end-market demand since 2022, fear not because the chip slump is ending. There has been a large amount of spending on consumer electronics during the pandemic, as many people bought a laundry list of electronics and tech companies. Their semiconductor counterparts have experienced less demand and, of course, higher inventory levels. However, there are signs that the chip slump is ending, with TSMC production and COEX guidance above Wall Street's estimate. Here's some news on the issue.
It's been a really whiplashy 90 minutes for TSMC in terms of putting out their numbers and then giving us guidance. So top line did really well, it beat estimates. The bottom line was beating estimates. The top line was in line, so they managed to squeeze out extra profit through cost controls. But then they gave the outlook. They said that this year their revenue and the industry revenue will be worse than expected.
These expectations of renewed market demand hinge upon China's economic recovery and United States-China relations. The economic recovery appears to be gaining more steam as of the third quarter economic data, and relations between the world's two largest economic powers seem to improve. These developments could spell good news for Nvidia's future. Once the slump is over, Nvidia stock soars back to the throne. If you can recall, the astronomical rise of Nvidia stock comes from quick decision-making on AI chips. So what else are you waiting for as an investor? Let me know in the comments section. Don't forget to like, share, and subscribe to this channel for more insightful content.